Okay, guys, we are recording. I am going to just share this I'm just going to share my screen with you guys so that you can see my presentation, and then we will get going. Okay, so for those of you guys that don't know me, or if you're watching the replay, I am Lauren Boyle, and we're going to be talking about accounting basics, primarily for an online store or boutique. Okay, so getting started. All right, so in the 2017, I did just over $400,000 in retail sales. Just as a little side note, this is for informational purposes only. I am not a tax or legal professional, and this cannot replace the advice of a trained professional. I highly, highly recommend, no matter what your sales volume is, that you speak with a CPA or some other tax or lawyer regarding your business, how you have that business set up, and the numbers that we're going to talk about now. I personally recommend you use the system that we are going to talk about on a weekly basis, and it works best if you do it the same day every week. So set a day of the week as your admin day, or what day you want to be paid, and set that day for the same day every week, and then you'll always be on top of your cash flow. For the purposes of this training, we're going to cover basic formula to help you manage your cash flow and expenses, taxes, including sales and income tax, managing volume and growth, expenses, gross profit, and your net before taxes and your true profit. First, you want to set up your basic framework. This is going to require setting up a business checking account, a business savings account, and you're going to need 3 business savings accounts: an inventory account, a tax account, and a supply account. Then you're going to need your personal checking or savings account, and optional but might be helpful, a credit card that is specifically for business expenses only. It's really important, especially as you grow your business larger, that you keep all of your expenses and your income coming into and flowing through a primary business account. Especially if you set up an LLC or you want to be filing as an S Corp, this is something that's actually required, that you be using a business account for these transactions. The first account we're talking about is the business checking account. This is the account where you will transfer your gross retail sales dollars. That is the money that you have after credit card processing fees have been deducted from your processing system. So for our system, we typically use PayPal or Square. So the money that you collect from your retail sales, once PayPal or Square has deducted that money, that account is going to be your business checking account. And I know for Square, it's going to deposit that money automatically into the account. PayPal, you have to manually transfer that money from PayPal to the checking account, and I recommend you do this once a week. Other fees that are required before you can do anything else with this money is postage to ship the product to customers from online sales. If a customer pays you $22 for a pair of leggings plus $5 for shipping, your sales the money that will come into your account will be $27 minus the processing fees, but $5 of those dollars you need to pay to ship that product. So you have to take care of that first before you can do anything else with that money. An example that we're going to use for the remaining of this training is your weekly gross retail sales after the credit card processing fees were $1,200. It costs you $200 to ship those items, so this account is going to begin with $1,000. So this is going to be the example that we're going to use for this entire process, my whole system for managing your cash flow. We're going to be talking about you have $1,000 this week to work with. After your credit card fees have been taken out, and after you pay to ship those items, you have $1,000. So now we can start with the managing of your cash flow. The next account is going to be your inventory account. This first transfer you want to make is for your inventory account. You have sold inventory and you must replace that inventory or you will go out of business without product to sell. You want to calculate the cost of the items sold during the previous week. You can do this simply with the following equation: your gross sales minus the money collected for shipping divided by the markup. Although our markup has begun to change a little bit, to keep it really nice and simple, it's nice to just do the half. We have a 2 times markup, so we make our mark up our product times 2, so just divide that number by 2. So in our example that we're using, our gross sales were $1,200. We're going to subtract out the money that we collected for shipping, which was $200, and we're going to divide that by the markup, which is 2. In other words, we sold $500 worth of inventory last week, and we need to replace that $500 inventory with $500 more of inventory. Now for this example, and we'll talk a little bit later about growing our inventory, but for this example, we're talking about maintaining our inventory level. You'll see a little bit later how it is you can grow your inventory. So now you want to transfer $500 from your original $1,000 from your business checking into your inventory account. So now we have $500 in our business inventory account. We have $500 in our business checking account. We paid $200 for shipping. The next account we're going to use is our business expenses account. This is the account that you're going to set up to set money aside for your business expenses. So what are business expenses? Shipping of inventory to you, mailers, ink for your printer, labels for your printer, business cards, hangers, subscription services, anything that you put in those packages. All of these things are business supplies that we need to manage carefully. And I love to set up my accounts like this, and I do this exact system with my own business because I think when we start seeing all this money come in, it doesn't really matter how much or how little is coming in. We see this money coming in, and we're like, oh, I can get that new computer that I wanted, or oh, I can buy a new rack, or oh, I can update my business cards. But sometimes we're not really looking at that money and what it should be allocated for, and whether or not we're spending the right percentages on different expenses. This is why sometimes you'll see leaders having conversations about items that people will put in mailers or ways that we package items in mailers, because all of these pennies add up in our business expenses, so we need to make sure we're being very careful with our accounting. I personally recommend 5% for your business supplies and expenses. These are operational expenses that you'll want to keep as low as possible in order to maximize your profits. Every penny that you spend on business expenses and supplies is coming right out of your bottom line for your profit. In our example, we have $500 left at the end of the week from our business checking account, so we will transfer $25 to our supply account. Now we have our net before taxes. This number is really important to understand. The net before taxes is the money that you will have to pay taxes on. The reason why we calculate it like this is because you do not owe income tax on money that purchases supplies for your business and inventory for your business. So that's why we deduct those two numbers first. For our example here, our net before taxes is $475. Now that we've calculated our net before taxes, we can continue. Again, the reason we remove the money for inventory and supplies first is because you only pay income tax on what's left after your expenses are paid. The first tax is estate sales tax. If you live in a state that requires you to collect sales tax on clothing, you must work with that state to understand the percentage that you collect from the customer, and then you must remit that exact amount to the state. Depending on your state and county's rules and laws, you might be remitting this monthly or you might be remitting it quarterly. It will be different for everybody, so you absolutely must check with your state and your county to make sure you're remitting this properly. I don't include this in the rest of our budgeting discussion because this is money you've added on top of your retail sales that you've collected from the customer that's going to immediately go to the state. The customer paid you $22 plus 10% sales tax. The 10% sales tax is going into your account, and then you're taking it right into you're transferring it right into the account for the state. Most states and counties allow you to remit this online, but again, every state and jurisdiction is going to be a little bit different, so you need to check with your town or county about that. The next tax is your income tax, your state and federal income tax. Now, this gets really complicated, and it's well beyond the scope of my understanding and the scope of this conversation. But for the purposes of business planning, you're going to take a portion of your balance from your checking account and you're going to transfer that into your tax account for state and federal income taxes. A CPA or another tax professional can work with you on an exact percentage, but to be safe, 30% is a nice place to start. Again, some people may owe more, some people may owe less, but only a CPA or a tax professional can help you with that exact percentage. But for this example, we're going to work with 30%. So you're going to take $425, which is your net before taxes. You're going to multiply that by 30%, and that's going to give you the income tax that you owe for that week. The income tax that you owe on $425 at 30% tax rate is $127.50. You're going to transfer that money into your tax account, and then it will be sitting and waiting for you on the quarterly basis when you remit your quarterly estimated sales tax. Again, a CPA or tax professional can help you with those details. Okay, next you have your personal account. So this is an account you probably already have. You can set up another account if you want, but you probably already have a personal checking or savings account, so use that one. This is your profit zone. So congratulations, you now have your true profit. You're going to transfer the rest of the money that's left over into your personal checking or savings account. So for this example, on $1,000 in gross sales, after the credit card fees and shipping costs to customers, you have a profit of $297.50, or approximately 30% of your retail sales volume. This number is so incredibly important to understand. This is how you can formulate your sales goals to meet your income needs and other requirements. Let me see if I can get. Okay. Okay, guys. So this is why this is so important to understand these numbers. First, I highly, highly recommend that you transfer these amounts, if not on a weekly basis, on a monthly basis. The reason is because this is going to solve all of these questions about how much money should I spend this week on inventory? You know, how much money should I be spending on marketing materials? Can I afford that subscription service I wanted? Can I afford the Dymo label printer? All of these questions are going to be answered with this account. Also, the stress and anxiety related to thinking about taxes. I know at the end of the year, it always becomes a big topic of conversation, but you really should be thinking about it every time you get paid. Because if you had a regular 9-to-5 job and you were collecting a paycheck, your company would be handling all of that for you. So you need to handle it for yourself, or you're going to get to the end of the year and you're going to be in a lot of trouble if you haven't planned ahead for that. So this will relieve all of that stress and anxiety. It's always better to have a little bit too much money sitting in an account that you can move around than to not have enough. I think having a supply account for me became absolutely crucial, because what I found was happening was some weeks I wouldn't have any expenses. I would buy poly mailers or I would buy hangers in bulk. And so I wouldn't have any business expenses for 3 or 4 weeks. And then I would maybe want to rebrand, or I would want to sign up for an annual subscription to a network marketing newsletter or some kind of other like professional service. And I would think, oh, I can afford that. But I wasn't really sure if I could afford it, because I wasn't looking at how much I was spending on business expenses when it came to my whole my business as a whole. Was I spending 10% on business expenses? Was I spending 12%? Was I spending 3%? What was I spending on business expenses? I started running Facebook ads, and I got to a point where I wasn't sure what percentage of my retail volume I was actually spending on ads, and I couldn't figure out if I was out of whack there or not. So for me, every week transferring 5% of my retail sales into that supply account, I can look at that account and I can say, okay, I have a couple $100s here. Do I want to go ahead and buy that course that I've been looking at for my business? Do I want to save that for a computer for the future? Am I not putting enough money in there because I barely have enough money to buy poly mailers? Do I need to look at sourcing less expensive poly mailers? So it was helping me manage my expenses in that way. The inventory account is completely crucial, because I know every time we have a launch, every time we have a new product launch, I hear from so many reps, how much money should I spend at launch? How much money is in your inventory account? If you only spend what's in that inventory account, then you will always be at least maintaining the business you have. Now, here's where I think a lot of times people are wanting to go, that you want to expand your inventory. So how do we do that? So the only way to expand your inventory is to use money from your supply budget or your profit budget. So if we had a $275 profit this week and we put $25 into our supply budget, that's the max amount of money that your business is self-funding in order to reinvest in your inventory. So you can see, if I want to grow my inventory by a certain dollar amount or by a certain piece size, how much am I going to need to do in retail sales to have that money in my profit zone or in my supply account in order to do that? These numbers are also really important because you can work backwards with these numbers. This is how I'm able to help coach and mentor you guys and any rep that comes to me. If they say, hey, I have this job, I make $2,000 a month, I really want to be able to quit it, but I don't see how that's possible. Well, these numbers make it really easy for me to be able to stick just numbers into a formula and tell, okay, if you want a $2,000 profit, I know that the true profit zone is about 30%. So if you want to make a $2,000 profit, then I know that we're looking at $6,000 in sales, $8,000 in sales. I know if you want to bring home $3,000 a month in true profit, we need to get you closer to $10,000 because that's that 30% range. So you want to have these numbers and you want to be dealing with your money and looking at your money and accounting on a weekly basis. I say weekly because a lot of times you think not a lot goes on in a month, but a lot goes on in a month. And you will subscribe to a service and you'll forget about it. Or you will run to, meet somebody to drop off an item and you'll forget to, submit the gas receipt that you have or log your mileage. But if you're doing on a weekly basis, it's a lot easier to account for all of those, and all of your deductions will help you with your taxes at the end of the year. And doing those in a week at a time or a month at a time is going to be so much more manageable for you than trying to do them all at once at the very end of the year. Personally, when I first started, I used GoDaddy. GoDaddy bookkeeping is affordable and it's extremely, extremely user-friendly. QuickBooks, which is what we've transitioned to now, is not user-friendly. It is expensive. It often requires the help of a CPA or a tax professional to set it up correctly, and it can be really like a daunting undertaking. And depending on your volume of business, it's honestly just more than you really need to run your business. GoDaddy bookkeeping, there are 3 different levels. There's like I forget what they call the first one. There's a first one, there's a really advanced one, and then there's one in the middle. For our purposes, we need the one in the middle. We don't need the inventory management stuff that's offered in the highest level one. And the most basic one isn't quite enough information for us. So this middle one will import all of your information from PayPal, all of those invoices. It will allow you to categorize things, and it will remember your categories. So once I categorize an invoice from Agnes and Dora, it will remember that's cost of goods sold. It will categorize all of those, and it will also allow you to run reports. So I can very easily at the end of the month run a report to see how many customers in my state of Alabama purchased from me and what their sales tax was. So it's so simple. So for just, it ended up breaking down to just be a couple dollars a month, like $3 or $4 a month if you paid for a year at a time. So in a matter of 4 or 5 minutes, I have the exact numbers I need to plug into the online system for my state, and I can remit my state sales tax accurately and quickly in just a matter of minutes without a lot of frustration. And I can also see at a glance, how much did I collect in shipping? How much did I pay in shipping? How much did I collect from, which states are people buying the most from? Who are my top customers? All of this information is easily accessible and helps me to increase my dollars that I'm gaining in profit because I can easily see what I'm spending in expenses. If my expenses are 12%, I know, hey, I'm eating 7% into my profit margin. If my profit margin is 30%, I probably don't want to take up 7 of that with frivolous expenses. So then you can look down on cutting all of that down. So I hope that information was helpful. I know it's just the absolute basics of the information for you. This conversation is really, it's such a large conversation. There's so many aspects to it, but I wanted to give you a very basic framework for how you could lay out your accounts. Now, there are a couple things. This is the easiest way to set it up because if you can physically separate your money, then you will not use money for things that it's not meant for. If you have an account for inventory and you have an account for supplies and you have an account for taxes, and every week you transfer the money accordingly to what your sales were into those accounts, and you discipline yourself to not take money out of those accounts because a kid gets sick or you need to run to the dentist or whatever, then you will never get stuck without money for inventory. You will never get stuck without money to pay that tax bill when it's due. And you will never get stuck not being able to buy poly mailers to replace the poly mailers that you used in your business. However, it can feel complicated to set that up because you're talking about setting up multiple accounts. You're setting up an account. Now, if you do not yet have an LLC or you're not running it as a corporation yet, and you're not going to for right now, and again, I highly advise that you talk to a tax professional because there's all kinds of tax implications about running a sole proprietorship. However, if you plan on not running it as a true business, you will not be able to have a business checking account because you require a business number to have a business checking account. You can just use a personal checking account. They have those with no minimums, low minimums. You want to look for banks that offer low or no transfer fees. And then you're going to have that initial checking account, and then you're just going to set up 2 or 3 savings accounts attached to it. So this is going to be your inventory account, this is going to be your supply account, and this will be your tax account. So you'll have checking and then 3 savings accounts. So let's say, for me, you have a PayPal account, which is what I use. I use PayPal. So at the end of the week, we're going to stick with our example of $1,000. I collected $1,200 after PayPal had fees for our example. I kept the $200 in PayPal to pay for the shipping. Let's just say I shipped through PayPal. I kept that $200 that I collected for shipping in PayPal. That money came right from PayPal to pay for the shipping fees. Now I have $1,000. I'm going to transfer that full $1,000 in to my checking account. Doesn't matter if it's personal or business for this example. I transfer it all the $1,000 into here. Then I'm going to take $500 because that was the inventory that I sold. I'm going to transfer it into my inventory account. Then I'm going to take the $25 because that's my supply budget. That's my 5% supply budget. I'm going to transfer it into supplies. And then I'm going to take the $127.50 or whatever it was, and I'm going to transfer that into my tax account. What's left over in that checking account is my profit. You can leave it in that account, or you can transfer it out into another personal account. But it's best not to use this account for personal and business expenses because at the end of the year or at the end of the accounting term, it will be much more difficult for you to sort through what was business expenses and what was not if you used this one account only. The inventory money, maybe because you're using PayPal, maybe you never transfer the inventory money out of PayPal. Maybe you want to use PayPal to buy your inventory because it's easy to do that through the Agnes and Dora system, which is what we're talking about for the purposes of this specific topic. So this $500, you can calculate all these numbers, but instead of transferring the $500 into a separate account, go ahead and keep it in PayPal if you want. But you just have to make sure that you're being disciplined and you have these numbers on a spreadsheet. So when it comes time to buy inventory, you're like, okay, my budget this week is $500. Because no matter how much or little business you do, you will think you will remember these things, but you won't. And you'll end up with $4,000 in your PayPal account, and you'll be like, wait, how much of that was supposed to be supplies? How much of that was supposed to be for inventory? What was supposed to be for taxes? The bare minimum would be a checking account for profit or for your business expenses that you use only for business expenses, and an account for taxes. Those would be the absolute minimum 2 accounts that you could have on top of a PayPal account where you're collecting money. Okay, I'm going to check the notes real quick, see if there's anything that I can answer while we're still recording. Then I'm going to take off the recording and I will answer. We'll do open forum. I think we're okay. So I'm going to end the recording part of it.